The question is simple. Have any of the systems on my network been compromised? The answer is harder than it should be. Enter AI Hunter. Active Countermeasures has automated and streamlined techniques used by the best pen testers and threat hunters in the industry to create AI Hunter, a network threat hunting solution that does the first pass of a hunt for you to identify systems that are most likely to be compromised and scores the results on a scale from 0 to 100. You can then research those systems in depth with AI Hunter. Focus your valuable time on the systems that need your expertise with AI Hunter. Sign up for a personal demo today at securityweekly.com/ACM.
Welcome back to episode 24 of Security and Compliance Weekly. We've been talking to Jeffrey Smith about the state of cyber insurance in our industry today, and we invited him to stay with us as we sort of do a quasi-news segment, but we're doing news that's focused on how cyber insurance is being dealt with more or less in the real world, at least how it's reflected in news stories. Before we jump back into it, I do have a couple of announcements. We here at Security Weekly, we're looking for high-quality guest suggestions, particularly for our Enterprise Security Weekly podcast. We're trying to fill up our upcoming recording schedule. We're, of course, committed to providing entertaining and educational content for the InfoSec community, and we would love to hear from our listening audience about any suggestions that you might have for people that we should be talking to. You can do this by submitting your suggestions, not only for Enterprise Security Weekly, but for any of our shows, going to securityweekly.com/guests. Fill out the form. You can actually designate which show you think the person should be interviewed on. We review these suggestions on a monthly basis, and we'll get back to you for more details if we think you've got a good idea. Also, join Qualys for VMDR Live on April 21st, which is coming up in a week. It'll be 2 p.m. Eastern Daylight Time, and they're going to be giving a live demonstration of their game-changing vulnerability management detection and response offering. It's a unified solution that integrates vulnerability management, threat prioritization, and patching into one single app. You can register for this at securityweekly.com/VMDR 2020. All right. Let's get back to us. Jeffrey, thanks for staying with us. We're sort of experimenting with this segment, but I'm curious just to see how cyber insurance is showing up in the news. What have been some of sort of the more notable cases, which I assume probably have to do with a breach and some company filing a claim and finding out they were or were not covered. Is there any particular case, Jeffrey, that comes to mind in terms, because you're probably more familiar about this than any of us, that just sort of jumps out as the classic, this is what cyber insurance is or isn't or should or shouldn't be?
Well, I think the most the most cited cases I think there are 4 or 5 of them, but I'll touch on a couple.
Okay.
Of them. One of them certainly is Mondelez, and it gets a lot of press. They had this big NotPetya hit, and they went to file a claim, and they're getting denied by their cyber insurer. Fact of the matter is they didn't buy standalone cyber insurance, and they're trying to recover from their global property insurer. Now, where it gets confusing is there actually is a coverage grant, a limited coverage grant in a property insurance policy that relates to replacement of media and maybe some component of income loss. If you look at Merck in terms of the same NotPetya, they're also suing their property insurers, but that was after they collected policy limits from the cyber insurance policy that they purchased. Going back a few years, there were a couple claims that are noteworthy. One was called Cottage Healthcare. And I think these go back to 2012 or 2013. And Cottage Healthcare got denied because at the time there was a maintenance condition in those policies. So if you said, that you maintained a certain level of security in your application, that became a warranty. And so I think it was a patching issue, and they said that they continuously patch. I don't know all the specific details. It's been a while since I looked at that file. And the insurer found out they didn't, and so that maintenance exclusion held. The bad news was they didn't get their money. The good news was that the black eye that it gave the insurance product at that time, helped them make the policy better. They got rid of those maintenance exclusions. The next one is PF Chang's, and they got hit with the big PCI thing. And again, at that point in time, the early policies, like a lot of early, cybersecurity software products, weren't very good, and so they've evolved over time. And before, the PCI was considered contract liability and wasn't covered under the early policies, and since then they figured out a way to underwrite it.
So, Jeffrey, you brought up the first two NotPetya cases, I think, are the ones I want to dig into just a little bit. Because the first one in Mondelez was the scenario I talked about earlier where my property policy has a cyber insurance rider in it, and that has certain limitations. And for them, it's like, tough. That's the only thing you had. You get what you get, and you can't throw a fit. The second one, though, with Merck, they had a separate standalone cyber insurance policy. But I think in that particular case, they're considering NotPetya an act of war and therefore not covered by cyber insurance. Did I get that right? Because that's what I think people really have to understand here.
The war exclusion is the defense that the property insurers will use not to pay the claim. The cyber insurance policies, I understand, and I think we can find this. I think I saw this in the SEC filings. Their cyber policy actually paid policy limits, and then they went for additional, recovery from their property insurance policy because, as I mentioned, there's a limited coverage grant.
Got it. Okay. So Merck was paid out on their standalone cyber insurance policy based on limits. They're trying to collect more against their property because of that property clause that has a cyber component included in it.
That's correct. That's my understanding. Uh-huh.
And of course, I wanted to hone in on the fact that you mentioned PF Chang's, where it was a PCI claim. I guess very, very succinctly, my belief, right or wrong, is that any of my customers that were PCI customers that were looking for cyber insurance, and some of them, would even say out loud, "Well, why do we have to do all this security compliance stuff? Why don't we just get a cyber insurance policy and be done with it?" Which I assume that you would agree is the wrong approach or wrong way to look at cyber insurance, but. Is there any truth in the belief? I guess it's my belief and other people's beliefs that somebody like a PF Chang, and I don't know the particulars, so you can fill us in. But if you were suffer a breach, you have this cyber insurance rider or policy, and you're found to be, because everybody that's been breached within PCI is found to be not compliant at the time of the breach. Does that impact?
Jeff, did you just admit that PCI is not perfect?
Yes, he did.
No, I did not admit that at all. PCI, sidebar, assumes that you will get breached and was originally intended to provide safe harbor to minimize the impact of the breach and
it's almost like we need a wrestling bell right now.
But retroactive.
But my question for Jeffrey is there any truth in if you're found to be, when you're filing a claim and you're found to not be meeting your compliance regulatory requirements the way that you said you were when you were originally underwritten, does that impact your claim?
Yes.
Well, I think let's talk specifically about PCI, and then we can talk about the application process. What's funny about PCI?
You'll get no argument from me.
Yeah. So. The funny thing about PCI is I put most of my business with 5 insured partners, and only one of them ask if you're PCI compliant, because the others figure you are until you're not, and so why even ask the question? In terms of the PCI itself and whether or not, if we make one representation on the policy, are we going to get paid? The bottom line is don't bullshit, on your applications. If you're not encrypting, don't say you do. if you're not PCI compliant at a certain level. They do ask what levels of PCI compliance you've achieved. Don't lie about it. You know what I mean?
Well, this is probably a good time for me to ask the question that I was holding off from the last segment. PCI specifically, but a lot of compliance programs, generally speaking, are a combination of, let's say, hard and soft controls, actual technical do this in terms of configurations and settings and tools and products. But there's also a significant portion, particularly in PCI, of, do you have a program in place? Do you have procedures? Are they written down? Are they based on policy decisions? Are you building things to standards, and so on and so forth? I'm curious as to what, for your company, what you're underwriting specifically, or just in general in the industry, how much focus is there on the technical controls and vetting them out versus the more non-technical procedural type controls that, at least in PCI's instance, is 60% of the ballgame?
I think, again, we get back to that large and small market, I think, in the small market, we just don't see PCI claims. I mean, I frankly haven't seen any of the small to middle market accounts suffer a PCI claim. Now, the large accounts, it's a different ballgame. So in the smaller accounts, as I mentioned, some of them don't even ask the question if you're compliant or not. On the larger accounts, if you're PF Chang's or another big retailer, they're gonna dig deep into that stuff, and so they're gonna have interviews and they're gonna talk about exactly what you're doing. So, that's what I see.
Well, the PF Chang's is coming back to me now a little bit. Wasn't it not so much an issue of coverage, but what exactly was going to be covered and pay out? Whether it was, fines and penalties versus, what it cost them to recover from the breach. Wasn't that part of the whole PF Chang's?
I had to go back and look at that. I wanted to recall that the issue was that most insurance policies, liability, third-party insurance policies, as we call them, have a contract liability exclusion. And the point there is, if you're entering into contracts that you're assuming risk, it's a good idea that we have that information so we can put a price on the risk that we're assuming. So back at the time of that loss, that policy had a contract liability exclusion, and they didn't. So there was no bespoke coverage grant for PCI at the time, is my understanding. And so when they went and paid, I can't remember who the bank was, whoever they paid, for the penalties and fees or fines and card reissuance fees and fraudulent charges, and went back and presented the insurer with the bill. I think they cited the contract liability exclusion at that point in time. Not 100% accurate, but I believe that's what happened.
Gotcha.
Jeffrey, you mentioned earlier you were working on a municipality, and we saw a lot of ransomware attacks at some of these municipalities last year, state, local governments, etc. What is the proper coverage for those types of attacks? How should people approach things like ransomware, right? Because one of the things we saw last year was we saw an uptick. We saw some payouts, which created some higher ransoms, but we also saw some places not pay out. So give me some guidance here for the municipality, state, and local law on ransomware.
Yeah, it's nuts what's going on in that space, huh? So the policies that we provide will pay ransoms, but we're not going to tell you to pay the ransom or not. That's going to be up to you. We provide services around getting the ransom paid, and again, we'll pay the ransom. But again, that's up to the insured whether they pay the ransom or not. It's tough, and quite frankly, I've been asked this several times. I was asked this at Black Hat a lot past couple of years. Does the presence of cyber insurance drive up ransom demands? I can't say that it doesn't, but the idea is you don't want to tell everybody that you have a cyber insurance policy. It's like the kidnap and ransom policies. Condition of kidnap and ransom policies historically has been you don't tell people that you have it. So I think that's an interesting dynamic that's playing out. But once those municipalities in Florida and some of these other places, start to pay out big numbers, man, it just, it's just taking off.
And do these policies have caps on how much they pay out for ransomware? Because, I think it was the case up in Massachusetts where what their policy was willing to pay wasn't anywhere close to what the ransom guys were asking. They countered to try to, have it covered. How are caps calculated in your policies? Are there caps for how much ransom could be paid out?
Yeah, usually the limit for ransom hits is the policy limit. So if you buy $1 million in insurance, you're going to have, policies that we provide, you're going to have $1 million worth of coverage for extortion.
Okay.
By $500,000 policy, by a $5 million policy, the limit for extortion claims is the policy limit. So in the instance of the Massachusetts thing, I want to think I read about that, but I think, the policy limit that they purchased was less than the ransom payment.
Right.
It's the one I'm thinking about. So, where you will see sublimits, and 85% of the claims that we're seeing are ransomware and funds transfer fraud. And you will see sublimits on the fund transfer fraud, or what we call cybercrime, social engineering coverage, that are less than the policy limits.
Got it. Interesting. Yeah, because we see a lot of wire transfer, wire fraud, that kind of stuff. Those have sublimits on them, but ransomware will typically pay out up to your policy limits. Okay.
That's correct. That's correct.
Scott, Josh, you got any more burning questions that are quasi-related to news stories?
Yeah, quasi-related to news stories. My biggest problem is that we've got risk being priced in wildly varying ways across the industry. We've got companies that don't know what they're doing in this world, in the cyber insurance world. We've got companies that do. We've got a significant issue with understanding the exclusions and policies. There's no real standard format. So is this news? No, this is old news. But it's a problem. And we've got the problem that nobody, what you guys are doing, I'm not doing news, I'm sorry. I have to ask this. You're doing extra work to come up with a properly priced risk and properly priced premiums and so on and so forth. That raises your costs. Does that make you non-competitive?
No, it's important, to remember that we can do all this, we can pretend like we got all this great actuarial data and that we're smarter than the other guys, or we do these scans and everything, but there's a huge market component, to pricing.
Yeah.
And so, I'll look at this municipal risk and there may be, maybe a 15% spread. There may be different deductibles and things like that involved that also come into the math, but there'll be a 15-20% spread in
between the 5 companies that you work with. You mean in terms of their pricing?
Yeah.
Okay.
Yeah. And then there's risk appetite. So I got a couple I won't even send a municipal risk to, or I won't even send a university risk to because they don't like them.
Okay, so you've got to sort of tailor your strategy to the appropriate risk appetite, to the deductibles, to the strategy of pricing that risk and premiums, to the appropriate partner to work with.
Yep. And again, they have different appetites. One class of risk that's developing a pretty awful taste in the insurance community are MSSPs and MSPs. Because they're getting hacked, so we're running out of the number of insurers who are willing to write those risks are dwindling fast.
What will make an insurer actually write for an MSP or an MSSP? What will make them confident that they can?
Well, remember that they're also writing like the technology errors and emissions insurance, and then the cyber insurance in the same package. That's a good question. I think, now Tech E&O, there is a a pretty significant, a material body of loss information, because technology, has been around for about 30, 40 years.
Oh, forever. That's been forever. Yeah.
So there is a credible body of loss data. The challenge is that now these MSSPs and MSPs have become targets.
Yeah, ransomware targets, massive ones. Absolutely agreed.
Yeah,
because
and
them you can get all their clients.
Claims are getting paid. Yeah, claims are getting paid. And so they're, a lot of it, to your question, a lot of them don't want to write them anymore because they don't know how to price them. So.
Oh, that's fascinating. So they're actually admitting the lack of actuarial data and lack of pricing knowledge is causing them to lose out on potential business because they don't understand or can't deal with pricing that risk.
Well, Josh,
yeah, I mean, they just, why bother?
Compliance.
If you don't know if you can make money on it.
No, and I respect it. If you can't make money on it, it's not worth writing. It's like my old sergeant used to say: if you can't write it, don't fight it. If you can't write the report correctly, don't bother getting in the fight.
That's right.
But it's a lot like we see with compliance with companies. How many businesses have we seen that have said, well, to go out for this bid, we need to match this level of compliance, right? It would be really interesting to see, to go after this bid, we need to have this much compliance plus this insurance level. Now, there are companies that are out there doing it, right? But a lot of the discussion that we've had has been focused on the largest, right? One of the questions that I think we should have asked in the first segment, well, we didn't get a chance to. I'm sorry, let me rephrase this. How does a SMB know that it's time to apply for cyber insurance?
I'm not sure how to answer that. I think an SMB, let me take it back up the distribution chain a notch. So we're technically a wholesaler, what's known as a wholesaler. So we provide expertise to small to medium-sized agents who otherwise don't have cyber expertise. What usually prompts them is that, agents now if they need to be putting a cyber insurance proposal in front of all their insureds, whether they buy or not, to cover their ass, right? So the last thing an agent wants to happen is for their insured to have a big cyber claim, and then not only do they not have the insurance, but the agent never offered it to them.
Is that why you're seeing them embedded in the property and general liability policies instead of as a separate policy?
I think that has more to do with competition. I mean, the definition of proprietary in my space is the amount of time it takes me to walk over to the copy machine. So, a lot of these package policies started to add them, and that's a big space with 1,000 insurers plus or minus. And so the minute that one does, the rest kind of follow.
Right. But what I think you're saying is you should have, what you're seeing is agents should be putting a separate cyber insurance policy in front of their client instead of the embedded one, or is embedded enough for the agent to get away with it to cover their butts?
Good question. I think understand. I mean, the embedded insurance in some of the policies, it's all not bad. So if you're a little tiny 3-man shop and you're having to buy you have an office, so you're buying a business office policy. $50,000-$100,000 of cyber insurance. It depends on the quality of the coverage. The point that I'm making is that standalone cyber insurance is something they all need to consider, if not just for the agents to make sure they're doing a professional job. So I'm not sure if that answers your question, but some of the packages, actually, there are few that do an okay job with the cyber. Where I get hung up in it is the resources that they can bring to bear in the event of a claim.
Oh, okay.
Let's take what you're saying there, Jeffrey, and shift gears a little bit. This second segment, this is sort of a news segment. We're sort of just continuing the conversation, but some of the things that we've talked about so far in terms of where cyber insurance hit the news, I think largely has had to do with either, it's always companies that suffer some sort of a breach or a ransomware attack. They either thought that they had the coverage or they didn't, or they had the wrong kind of coverage, or they've gotten into disputes over, how much coverage do they have, the breadth of the coverage, so on and so forth. So we've talked about that. I had asked you to try to come up with sort of a positive news story, which is counterintuitive because nobody wants to read about where cyber insurance just worked and it paid off. But to sort of springboard off of what you were just talking about in terms of, you feel like companies should be considering it. You did give us one article that's entitled "Cyber Insurance Payout Rates Are at 99%." So for some amount of companies out there, it's working. Can you, and you can certainly use the article as sort of a cheat sheet, but what are the reasons that companies should consider? What is the coverage that they probably are getting without getting into the minutia and the details and the disputes? But what are reasons that companies should be considering cyber insurance? You've already said they should be, so it's not so much a question of when, but what kind of things that should they be taking into account? Like the article talks about the value of cyber insurance. I'll present these, and this can be your cheat sheet or your notes. They mention it without comment. 6th thing: cyber business interruption loss, privacy breach costs, cyber extortion cover, hacker damage, media liability, and cyber forensic support. Go.
So, as I mentioned earlier, 85% or so of the claims. Well, first of all, let me back up. That article I sent you was probably written by an insurance person. So I don't know if 99% is right.
So it's lies. I got you.
Yeah, we had a guy on our panel at Black Hat this past year who runs Chubb, who's one of the premier providers. And I think that his number was they pay 90% of the claims that come in. And that just means that 10% of the claims, either the policy didn't write that or there was some dispute relative to the application of coverage. Again, 85% of the claims we're seeing are ransomware and funds transfer fraud. And the funds transfer fraud is getting out of control. I mean, it's shocking how many people will send a wire without picking up the phones to check on last minute changes in wiring instructions. It's just astounding. I had 2 last week. I had 4 last month. And I mean, these are small companies getting burned for $150,000, $175,000 because somebody didn't pick up the phone and call to verify, wiring instructions, or they didn't have somebody else in their company validate, the transfer. So I think those are the two primary reasons that I would say. We don't see much in the way of liability claims. Like I said earlier, we don't see much PCI claims. We don't see much in the way of media liability claims. Every now and then one will pop up. But, in terms of the coverage that I would be buying if I were a small business, I would just make sure I had breach response, business interruption, which is becoming a bigger issue, the cybercrime piece, and the extortion.
Yeah, but in your article, and we have this listed up in the wiki. In your article that you wrote for Sentinel-1, you put a very poignant statement in there, right? And it really rings true that even though we're talking about cyber insurance, right, it's still not a replacement for best security practices, right? Most breaches come down to the human element, right? Do you want to tease that out a little bit more?
Yeah, well, you guys know better than I do. It's all clicks. I mean, it's all clicks. And, I don't know. Yeah, I guess opinions vary on awareness training, but it's cheap and a lot of times it's provided free in these policies. But again, it all boils down to clicks. I mean, we've seen companies have Mimecast and have socks and all this other fancy stuff, and employ clicks on something. And,
okay, so let me shift the question just a little bit. If we gave you an opportunity to be able to fix a couple of things in cyber insurance the way that it's done now, where would you start?
Boy, that's a big question.
It's a big question, okay, so let's scope it down. One place that you could see people easily improving on cyber insurance, what would it be? What's your go-to response for that?
In terms of, value for the money, I would say, and again, I'm not a security guy, but in terms of value for the money, multi-factor authentication is free. The training is free or really cheap. What's it, $17 to $20 per person per year to get some meaningful training. Those are the two.
Well, meaningful is questionable.
Go ahead.
Meaningful training is questionable, but
yeah, that, and I understand that. I think the issue is just ideally we just raise awareness. The idea is not to have a claim. We talk about, is insurance good? Is security good? The idea is not to have a claim in the first place. I mean, insurance claims are a hassle.
Did we lose him?
He froze up. Oh no!
Up.
Well,
no.
I guess that's a good time to end the segment. Well, it was time to wrap up anyway. Jeffrey, no, you're back. Yeah, you froze up for a minute, so we were treading water there. But it is time to wrap up. Jeffrey, appreciate so much your willingness to come on and try to take on a bunch of grumpy old skeptics. I think we treated you fairly well, and you seem to hold up pretty well. I'll give you the opportunity for any final thought, parting shots. Give us your best 90-second in 30-second pitch on why cyber insurance is something our customers, our listeners should be considering. And he's frozen again, so we're not going to do that.
We'll get it from him and post it later. Okay, but
there we go.
Take us out.
All right. So thanks for. All right, back. All right, real quick while we have you, give us your parting thoughts on why people should buy or consider cyber insurance. Go.
Well, I guess I get back to you can have all the security in the world, but unless you have $500,000, $1 million laying around in your budget that you're not using, cyber insurance could be a good idea.
I can accept that. I think it boils down to, and this is something that's not understood very well in the security or the compliance world, all of our best efforts don't ultimately prevent the breach. So what do you do when the breach does happen? And what you're saying is it's a good idea to have cyber insurance. On that, we're going to wrap it up. Jeffrey, thank you so much for joining us today. And gentlemen, stay safe, stay isolated, and try not to get stir crazy.